Welcome to Mint. I'm Malia Politzer. In today's edition of From the Newsroom, we have with us Prashant Nanda. Welcome to the show, Prashant. We're also joined by Mr. Bhupendra Meal from AK Capital. Welcome to the show, Mr. Meal.
Thank you.
Today we are here to talk about the Employee Provident Fund organization's willingness to increase its scope into investments in order to increase returns for its subscribers. Prashant, my first question is for you. Can you explain a little bit about the decision that was taken today?
EPFO largely took two decisions today. One, which is largely more of a formality, is that it approved the Reliance Capital AML's decision to divest 26% of its stake to Nippon Life Insurance. The second point is more important from an Indian customer point of view. This point is that the Employee Provident Fund organization today approved a proposal under which now the corpus or the fund manager of EPFO can invest the amount or the funds in certificate of deposits of the public sector banks. They can invest in CBLOs, which is a short-term debt market instrument. And third, they can now invest in government bank fixed deposits with a tenure of 1 year up to 5 years, which were not the case till date. So they believe that by doing this, they can increase the return on the investment, which is a plus for every single customer. The base is at least 50 million.
My next question is for you, Mr. Meal. Can you explain to me how expanding the investments will increase the returns for subscribers? Why not just invest in mutual funds or in stock markets?
First of all, I think it's a welcome move because any change in the investment pattern, whatever changes that has happened today, is happening after a long period of time. The changes which has brought in the Ministry of Labour pattern happened in the year 2003. So, the current changes are coming after a gap of 9 years. So whatever minor changes that is happening, it's a welcome move. Now, if you look at the current investment philosophy of EPFO, they are large investors in Indian debt market. And obviously, market keeps coming, throwing opportunities in primary as well as secondary market. Introduction of short-term instrument will help the fund manager to prepone or postpone depending on the cash flow of the fund. So it's a very welcome move because till this point of time, the only available instrument was fixed deposit. So these two are tradable instruments, so it's a welcome move. Secondly, extending the tenure of fixed deposit in PSU banks for 5 years is also a good move because when we look at Provident Fund investment, we say that the liabilities are long-term in nature. So you should have long-term assets as well.
Now, Prashant, I know that there was a proposal, but why did the Central Board of Trustees ultimately decide to limit the number of investments to 7 private companies?
See, the nature of EPFO and the CBT is that they are little risk averse. Okay, they generally do not want to take a lot of risk because they believe by taking any kind of risk in terms of investment decisions can hamper and dwindle the corpus of the common man, because EPFO is a retirement fund of the common people, especially in the non-governmental organized sector. So the moment they take any other decision, it would have affected. Why they didn't do it, they perhaps thought that the decision to invest in more companies would be appropriate when the CBT, the government and the Labour Ministry discuss and deliberate it further and come to a conclusion. Because the measures are stringent. Now to be invested, there are only 7 companies, private companies, in which the EPFO invested corpus. They are HDFC Bank, HDFC Limited, Axis Bank, ICICI Bank, ILFS and LIC Housing Finance and IDFC Limited. Beyond these 7 companies, there was a proposal that they should expand their horizon to invest in more companies. But they are restrained from doing that. Because what they are thinking that they can only go for companies which has a AAA rating, which has given dividend to its stakeholders for the last 5 years consecutively, and it is listed, and it should be at least with a market cap of 5,000 crore. These are some of the reasons. There are many other reasons to select a company, especially the clause under which they select. But the CBT, especially the trade unions, the employer associations, the company, the bureaucrats all feel that there needs to be a lot of more deliberation before they expand the scope. Definitely people believe in the EPFO that expanding the scope will definitely give them an edge, but there is always pull and push factor. As somebody said, it is a mix of risk averse, ideological, sensible decision for the time being.
So they decided to make the safe choice.
Yes.
Thank you, Prashant. Thank you, Mr. Meal.
Thank you.
And that wraps up today's show. Please stay tuned for next time.